This is the fourth video on the series of 30-step path to financial wellness. If you have not seen the previous 3 videos, you can go to the playlist of financial wellness on my channel. In this video, I'm going to discuss the third step towards the financial wellness, which is called clearing out financial clutter, or clearing out financial, you can say it as a trash. I know that you are anxious to get started, but it is hard to get motivated when you are knee deep in paperwork. So getting your financial house organized is a great way to begin with your path towards the financial wellness. So it is important to, to know that some things are worth hanging on to and some thing needs to be clearing out. So in this video I'm going to tell you some financial documents or information that you need to keep with you, and some financial documents are the financial information which you don't need to keep. So let's get started with the first piece of information or paper which we will consider in this third step, which is grocery receipts. The grocery receipts and other non-deductible expenses. Receipts and statements can be destroyed after they had been recorded and reconciled, so you can destroy it. Can be destroyed. The second thing which you will need to consider will be paycheck stubs. If you have account for these paycheck stubs in your statutory income return or income tax return, or if you are in US in your W2 form, then you can destroy. Otherwise you need to keep them until you file your tax return with the tax authorities. Keep until filed. The third thing is cancelled checks. Cancelled checks should be saved for at least 3 years in accordance with the US regulation, because you may need to present these cancelled checks to the relevant tax authorities. So keep for 3 years. The fourth document utility bills. It can be destroyed after recording them in your books. Can be destroyed. But if these utility bills need to be declared in your income tax statement or your income tax return, then you will need to keep these bills. Generally, you can destroy them. And the fifth information is uh, house related documents. Now, what are these? Now, documents which are related to buying, selling, or improving your home should be kept as long as you own the home. Okay. Uh, keep until you own the house. The sixth information will be receipts from major purchases. Keep as long as you have the item with you. The seventh information or document which you need to consider holding or destroying are credit card receipts. Now, credit card receipts can be destroyed if you have reconciled with your monthly bank statement. Additionally, credit card monthly statements can be destroyed on an annual basis. So we can say that it can be destroyed. The eighth information will be tax return documents. Now, these tax return documents vary from country to country. If you live in America and you regularly file annual income tax return, then the Internal Revenue Service, the IRS, require you to hold these tax return documents for at least 7 years. So you need to keep them for 7 years if you are in USA. These requirement for Pakistan may be different. This requirement for India can be different. So you need to check with your local legal requirement to hold the income tax documents. For US, it is 7 years. The ninth, in fact, there are only 8 items which you need to consider holding or destroying for sailing on the path towards the financial wellness. So you need to consider these 8 steps in your third step, which is called clearing out financial clutter.